protecting Main Street from Wall Street. It's Chris Hoffman with Money Unleashed.
How much money do you put into your checking account from work on a month-to-month basis? It has a high probability that with your investable assets, we can replace that paycheck.
It's time to put you back in control of your money.
You've worked for 35 years. It's time for you to not stress. It's time for you to enjoy and live the retirement you want to live.
It's Money Unleashed with Chris Hoffman.
Welcome to the Money Unleashed podcast with Chris Hoffman of the Hoffman Financial Group. We have another great discussion to get into today, but before we get started, I want to let you know you can hear Money Unleashed from 11 a.m. to 1 p.m. Eastern Time on WSB in Atlanta. And of course, you can subscribe to the show wherever you get your podcasts. Just search for Money Unleashed. With that said, let's jump into this week's show. And Chris, we are barreling through 2025 at breakneck speed. At least it feels like it to me. But this year is like all others before it and all others to come after it for those nearing or in retirement. And what I mean by that is there's going to be a litany of unique challenges and hurdles to clear in order to successfully navigate the financial times we find ourselves in at any given moment in any given year. U.S. News & World Report recently shared some of these retirement challenges we could be facing this year, and the list includes many of what I would call the usual suspects. There's inflation, market volatility, questions about Social Security, but these are all things Hoffman Financial Group is here to help people plan for. All of these and more, really, aren't they?
Yeah, and my client meetings over the past week or so have been very much in tune with, okay, when and how much will the market pull back? So I'll share with everybody who's listening my lean. And investing, it's always a lean. There is no crystal ball.
No.
I think I broke that in my late 20s, early 30s. So I don't have a crystal ball. I can't tell you exactly what's going to go on the market.
Yeah.
Can't tell you exactly what's going to go on the economy. Mm-hmm. But obviously I have years and years and years and years of experience doing this. So let me tell everybody and give you a direct lean in where I think things are headed. Short term, I think there's almost too much being thrown at the economy and at the markets. Very aggressive. Trump and his administration have been very active, very aggressive, very forthcoming in, hey, here's what we're going to do across the board. Mm-hmm. There will be a ripple effect of that. And unfortunately, fear does play a part in how the markets react.
Right.
It's uncertainty, it's fear, it's doubt that's driving this volatility in the market. Now, that's independent of the fact that I lean towards some of these or the majority of these items that Trump is imposing are necessary and will have a positive long-term impact on the economy and on the markets. But there may be an adjustment period over the next 12 to 18 months when we get through all of this and we see nothing's as hard-hitting as the first announcement, right? And that was last Thursday with 25% tariffs on Mexico and Canada, another 10%, which brings China up to 20%, and then Trudeau and the Mexican president, they are talking about retaliation, which is a scary word. It puts fear in the market, and it sent the market down substantially at times last week. So what do we do with our clients to prepare for that? We're not panicking right now and selling out of the market. We've been preparing for this for the last 2, 3, 4, 5 years as the market has gone up. And this is a great exercise for everybody who's listening right now. Go into your 401k account and go back 5 years. And between what you've contributed, what your company has matched, and how the market has performed, how much have you grown your portfolio? Is it up 100%? Is it up 50%? Is it up 150%? Is it up 290% or more? And ask yourself this question. If I were to lose 20, 30, or 40% of it, would I be devastated? Would I make a reactionary decision and sell out at a lower price point than today? If that's a concern of yours, I would absolutely pick up the phone and call us. And call us at 404-341-6767 and have us do a portfolio x-ray. In that portfolio x-ray, we can give you a maximum draw, which basically states if we go back and test your portfolio during the Great Recession, during the COVID correction, during the inflationary spike in 2022 and the market pulled back, we can take even it back to the dot-com bubble that burst. It will show you if your portfolio went through something similar to those market corrections, how much would you lose? Now, if we tested against the Great Recession, and the Great Recession, the market was down 40% and you'd only be down 15%, maybe that's palatable. Maybe you would look at that and say, that's a good answer. I can handle that because I'm not overly invested in stocks. Then we'll look, obviously, at how you're growing your money against benchmarks to make sure you're not leaving money on the table. So the name of this game is we want to take advantage of a 290% market rise in a 5-year period, but we do not want to give it back in 20, 30, or 40% chunks.
Right.
So that's how financial planning and diversified asset classes can benefit our clients. 401ks basically have 2 asset classes in them: equities, stocks, and bonds, fixed income. At times, both of those will head south. So bonds do not protect you in a mutual fund, as an example. You can lose money if inflation takes off and interest rates go up. Your bonds will decrease in price. So you need more asset classes, and we need to broaden the discussion out to include those asset classes. First, we need to do a portfolio x-ray for you to make sure you understand exactly what's in your portfolio, how it's growing, what your risk profile is. And we can also do a fee analysis to make sure you're not being overly charged to your 401k company or your advisory team.
Couple of important discussions to have. No better time to have them than right now. The number again is 404-341-6767, 404-341-6767. That Portfolio X-Ray is a complimentary service, so there is no cost to this. The information, though, that you could gain, that could be pretty valuable, especially when we're talking about things like market volatility. And you brought up another one that's on this hit list that I saw in this article from U.S. News & World Report. That's inflation. I mean, we do know this one, Chris. It cuts into our buying power. Building an income plan can help combat the effects, so perhaps take that concern off the table or at least mitigate it quite a bit, can it?
Yeah, and I don't think anybody would argue that we believe inflation is going to rise a bit, especially with the tariffs and all the political ramblings that are going on. It was not a good week in the news.
No.
Politically, it was not a good week in the news from a market standpoint. It was not a good week in the news as far as international exposure. So inflation is real. It is most likely going to rise. That's my lean. I believe we are going to see inflationary pressures as things kind of settle in, hopefully. And hope is not a good financial investment strategy, so we don't use hope. But on the personal side, I hope that Trump can navigate these waters and ease off and or get the international countries to back down quite a bit from their aggressive first-week stance. But inflation is something that we need to plan for. So when we run our full financial plans, we build in an inflationary percent. We can use the historical average, which is about 2.8 or 2.9% historically, or we can adjust it. We can say, hey, let's test this portfolio at a 3% inflation rate or a 4% inflation rate or whatever number we pick. So it is incredible to look at the difference in how your portfolio will perform going from a inflation rate that's in the 2% range to the 3% range. I think I've used this example before, but years and years and years ago, I was working with a client that had a liquid net worth of approximately $3 million. We adjusted inflation up 1%, and it stole $1 million from their portfolio over a 30-year period of time.
Wow.
That's a lot of money.
Yeah.
Nobody looks at that and says, oh, well, I lost $1 million. Right? If their $3 million portfolio went to $2 million, they would come in here and hit me over the head with a bat and say, you lost $1 million of our money. But nobody is saying inflation is literally stealing $1 million of my net worth. Mm-hmm. And to turn a blind eye to that reality is setting you up for financial failure in retirement because you're not getting increases from your work. You don't get those annual increases. You get COLA increases on Social Security, but that's about it, folks. Yeah. You don't have pensions that are increasing every month or every year. So you've got to address inflation. You've got to put it in various scenarios. There are products that do adjust for inflation. There are fixed income products that will raise their payout during inflationary times. Dividend stocks also historically react well in inflationary times. They typically raise their dividend at a faster percentage than what inflation is. So that can be somewhat of an inflation hedge as well. The right dividend stocks can help you. Last week, I met with somebody that in November of 2024, we moved him from our growth portfolio, where he did rather well. Obviously, the market's done well, and we've beat the benchmarks for him. He's very happy. We took his growth portfolio and we moved it to a dividend stock portfolio. And fortunately, the timing was right on that because the Mag 7 is taking a little bit of a beating right now, and we were able to move him to something that's going to generate positive income for him and his family and reduce his standard deviation, which is measure of financial risk. And this is a client of ours that takes us up on every quarterly meeting. It was a Zoom meeting, and it was 45 minutes. It was not extensively long, but it was very powerful. He's very engaged, and we're able to massage his portfolio versus panic and make mistakes. You're not allowed to make mistakes in retirement. You adjust, you massage your portfolio inside your financial plan. And that's the way we manage our clients' portfolios and financial lives at Hoffman Financial Group.
And those meetings, the active portfolio management, a critically important part of your financial planning. And Chris, you've been doing this for a long time. It means you've seen a lot over the years. And as you know, the things we experience in our financial lives and throughout our working years are the exact kind of things that we're going to need to plan for in retirement. So let Hoffman Financial Group size up where you are with that portfolio X-ray. It's a complimentary service that can identify ways to optimize your accounts and help you do the things that you want to do and need to do to have that successful retirement. Give us that call. Get your portfolio X-ray. It all starts there. There's no cost to do so. 404-341-6767 is the phone number. 404-341-6767 and online at unleashyourmoney.com. You can click on that box. It says Portfolio X-ray right there on the site. Chris Hoffman is an investment advisor representative of Brookstone Wealth Advisors, LLC, a registered investment advisor and affiliate of Brookstone Capital Management, LLC. BWA and Hoffman Financial Group are affiliated under common ownership. Registered investment advisors and investment advisor representatives act as fiduciaries for all of our investment management clients. We have an obligation to act in the best interest of our clients and to make full disclosures of any conflicts of interest. Please refer to our firm brochure, the ADV2A, page 4, for additional information. The Hoffman Financial Group and WSB are not affiliated. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. This information should not be considered tax or legal advice. Individuals should consult with a professional specializing in the field of tax, legal, accounting, or investments regarding the applicability of this information for their situation. Any client experiences discussed during the show are unique to that client. They are not meant to imply or suggest you will experience the same results. Past performance is not a guarantee of future results. Investments will fluctuate and when redeemed may be worth more or less than when originally invested. Any comments regarding safe and secure products and guaranteed income streams refer only to fixed insurance products. They do not refer in any way to securities or investment advisory products. Fixed insurance and annuity product guarantees are subject to the claims paying ability of the issuing company and are not offered by Brookstone. Index or fixed annuities are not designed for short-term investments and may be subject to caps, restrictions, fees, and surrender charges as described in the annuity contract. Please refer to our firm brochure, the ADV2A Item 4, for additional information. Hoffman Financial Group is not affiliated with or endorsed by the Social Security Administration or any other government agency. Insurance licensed in Georgia, number 163546.